Check, please.
Welcome back. Today we're talking about Advanced Micro Devices, AMD, a highly discussed stock. We will show you Paul's thoughts on the financials. We will move toward what you can be paying for this company moving forward using our amazing stock analyzer tool. Listen to these guys. They own over $100 million in assets. We just got back from Mexico, Paul, and I still have my sunburn. So listen to these guys moving forward. Check out this video on AMD. Go ahead, Paul.
All right. Thanks very much, Seth. Guys, follow us on Instagram, Everything Money Investing. It's our new Instagram account. It's going great. It's growing like crazy. And then also, please don't forget to follow Seth, Mo, and I. We don't want to feel ignored. It hurts our egos, and we're very fragile emotionally. So guys, AMD, Advanced Micro Devices. This is Intel's big competitor. For the last 20 years, I've heard nothing more than, oh my gosh, AMD is taking over Intel. Intel sucks. They're so antiquated, blah, blah, blah. Disclosure, full disclosure, spoiler alert. I own Intel stock. I think it's a buy. I think it's a value play. I think it's worth between $70 and $80 a share. It's currently in the mid-50s. I've been buying since mid-40s. I love it. Okay, so let's go to our exclusive Everything Money software. Let's do AMD, Advanced Micro Devices. Look at the stock price history. Look at this run-up. In 2016, it was $1.84. Now it's $136. Hit a high of $165 in the last year. Big time growth. All right, market cap, $166 billion. Pillar number one, we want the 5-year PE less than 22.5. It's 158. That's a massive X. Pillar number two, we want the 5-year return on invested capital greater than 9%. This shows how well they're making money on the invested capital through debt and equity in the business. It is 9.5%. Check mark there. All right. So 1X and 1 check. Keep note, their 5-year average free cash flow is $700 million, but last year they did $3 billion in free cash flow. That's a big jump. Remember, the last year had a lot of chip shortage. There was the chip companies were the driver's seat here, and AMD is in that driver's seat right now. All right, pillar number 3, we want revenue growth over the last 5 years. So we go to our software, go to the income statement. So top line revenue growth. 5 years ago, 5.07 to 14.85. Check mark. Tripling, almost tripling of revenue. That's awesome. Pillar number 4, we want net income growth. So we scroll down a little bit. 5 years ago, they lost $66 million. Last year, they made $4 billion. Check mark there. But look at this, guys. Look at the last 10 years. Negative $900 million, negative $650, positive $50, negative $1 billion, negative $550, negative $66, $280, $209, $880, $3.97. This is a massive jump in profit. Please, please, please don't assume that's going to happen forever. Because last year was a major anomaly. Even look at their revenue. Their revenue went from 8.65 to 14.85 in 1 year. Anomaly, I think. This is something to be cautious about. Don't overpay for that. Pillar number 5, we want shares outstanding staying the same or going down because we want to own more of the company and we want the company to buy back its shares so existing shareholders own more of the business as time goes on. 5 years ago, they had 957 million shares outstanding. Last year, 1.2, consistently going up. 10 years ago, it was 745 million. So clearly, guys, they've been doing a lot of funding of their business, all those losses through issuing shares. I don't like seeing that. Does that mean it's an automatic no? No, guys. None of our pillars as a check marker in X mean an automatic buy or an automatic avoid. It's just something to tell you the whole story of the company to determine what you want to do next. All right, pillar number 6, we want to look at their debt. So what do? We go to the metrics, the main page of our software. We look at their 5-year average free cash flow, $700 million, multiply it by 5, $3.5 billion. So what does this mean? We want their total long-term liabilities to be under $3.5 billion. All right, so we go to the balance sheet. We scroll all the way to the bottom. Total long-term liabilities, only $450 million. Wow. Tim, you see that? Look at this, guys. 10 years ago, they had $1.4 billion. It's all the way down to $400 million. I love that. It shows that they're using their equity. And this is what I want everybody to understand. They're using equity to finance their business because they realize how overpriced their company is. Issue the shares. Give the crack out to the crackheads. They're just literally at the street corner drug dealer issuing shares out to people going, hey, if you're going to pay us 160 times our profit, we will gladly issue shares. Better not take on debt because we have to pay that debt back no matter what. But when you issue shares at high values, all you're doing is giving overpriced stock out to people. What do you care if you own the company? Yeah, you dilute a few people. Fine. I'd rather have that if I'm a CEO and CFO than have more long-term liabilities. So pillar number 7 and 8 have to do with free cash flow. So guys, free cash flow is the lifeblood of the business. It's cash from operations less your capital expenditures. You can do one of 5 things with free cash flow. You can buy back shares, pay down debt, make acquisitions, reinvest back in yourself, and pay dividends. All right? They're not paying any dividends in this company, which most fast-growing companies do not pay dividends because you can reinvest in yourself. So what do we do here? We have the cash flow statement, cash from operations less your capital expenditures. But us here at Everything Money, we added this line for you. This is not on any other cash flow statement. We added it here to make the math easy for you. They did negative $223 million in free cash flow 5 years ago, 2.96 last year. That's a check mark. And our final metric, we take the 5-year average free cash flow of $700 million, multiply it by 20. That's a $14 billion value. That's the price we kind of want to pay the company from a 500-foot view. It's currently selling for $160 billion. Massive X. Massively overpriced. So let's go to the 8 pillars tab so I can show you guys everything overall, because our software does all this work for you instead of doing the math. So here are all the X's and checks. Our biggest ones here are right here, valuation-wise. I don't blame them for this, the shares outstanding. I don't blame them at all for issuing more and more shares because people are going to overpay. Might as well. Look at these valuation numbers. 240 times 5-year. Even if they did last year's free cash flow over and over and over again, they're still selling for 50 or 60 times free cash flow. That's still really, really high. Now, Intel is a $200 billion company that has $77 billion in revenue. So it's a little bit more, 25% more, but has 5 times more revenue, 5.5 times more revenue. Its net income is 15 or 16 billion a year. That's why Intel to me is a better buy. So AMD is great. They're making great chips. They're awesome. I love it. But at the end of the day, you can overpay for a good thing. And I think that's what's happening here with AMD. I think you're just overpaying for a good company. I don't think this 14.8 billion is a threshold that's going to stop. It's going to level. I mean, I think it could very well go down. I'm not saying it will, but we had a big jump last year because of the chip shortage. Go look at everything. The chip shortage affected things. Just like if a COVID affected a business, I wouldn't punish the business forever. I'm not going to reward AMD forever because of a chip shortage. All right, guys. So with AMD, what we're trying to do is figure out a price to pay for AMD. I can say till I'm blue in the face that it's overpriced. But the most popular part of our software has become the stock analyzer tool. Every investment is the present value of all future cash flow, and the future is unknown. So what we do is we make assumptions on the future and hope we can buy the stock for less than the assumption, because the stock analyzer tool will tell us exactly what to pay for the company based on our assumptions, right? Okay, so let's go to the stock analyzer tool here. I think AMD is going to be around for a while, so I'm going to do a 10-year analysis on AMD. Now, it's going to tell me my last 1, 5, and 10-year numbers, and I'm going to use those to make assumptions. And plus, you should do some research to determine what actual growth rates you expect. So I'm going to sit here and say, let's go with 5% on the low side, 8% in the middle, and 11% on the high. Well, let's go 9 and 13%. Profit margin. Now, profit margin here is all over the board. You see 3.5% to 26%. Intel's profit margin is around 22%, I believe. So let's go somewhere in the middle here. Let's go 15, 18, and 21%. Free cash flow margin, I'm going to keep it the same as profit margin. Now, PE, I'm going to go 14, 16, and 18. Same with free cash flow because it does have more growth potential, so I'm going to pay a little bit of a premium. And always, guys, for my desired annual return, I always do 12.5%. Because you can buy an ETF and get 9 or 10% over long periods of time. So for me to actually go buy an individual stock with a margin of safety, I want 12.5%. Hit the analyze button. Now, my goal here, guys, is to show you how overpriced AMD is. It is currently selling for $136 a share. Our stock analyzer tool, the best case scenario, according to my assumptions, is $74 a share. Worst case is $25, and somewhere in the middle is $50. So as you can see, it still has a massive drop to go before it hits my sweet spots of value. Now, guys, remember, it's all based on assumptions. If I increase these revenue growth rates to 10, 15, and 20%, let's look what happens. Look at that, though. Still overpriced. So even if you think AMD is going to grow at 20% a year and have those other assumptions, it's still overpriced. This is what tells me AMD is overpriced in general. It's just an overpriced stock. This is what's useful about the stock analyzer tool. It can bring us back to reality, because sometimes most times what happens is people hear a lot of growth and they don't actually calculate what that growth is worth. Remember, you can overpay for growth. Don't get yourself caught doing that. That's why the stock analyzer tool is so useful for our users and investors in general. So anyways, guys, that's why I think AMD is so overpriced. Call me crazy because the stock has gone up. So you sit there and say, this guy's nuts. But there's 1,000 stocks out there I can show you that we said was overpriced in the last 20 years that end up coming to reality. And there's ones I've missed too. But either way, this is where I stand on AMD.
If you're drawn to these numbers and you've been struggling out there to find a great way to invest, a process, you can join our community, get the software right in the palm of your hand and your cell phone. Paul, tell them how.
And the reason we created all this software is because as we made videos of the company, people would reach out to us and say, hey, how do I analyze my own companies in order to do the analysis versus waiting for you guys to make a video? So we created the software. You get everything you saw here. You get everything on the main page that's also coming soon, right here to the right side. You get 30 years of financial data. You get access to Seth, Mo, and I in our exclusive Everything Money chat here at the top, EM Community Chat. You get the Stock Analyzer tool. You get Real Estate Calculator, Retirement Calculator. You get 8-pillar portfolios, which allows you to put up to 50 stocks in a portfolio to tell you how all 50 companies do at once, or 20 companies, doesn't matter. But exclusive daily content. We make 1 to 3 videos a day that we post. They're called A Few Good Minutes. They're wonderful. Seth, Mo, and I make them. But most importantly, guys, is this EM community. We have over 6,000 people that constantly talk in the community about their investment ideas, because the great thing about the internet is it allows all of us who have a certain way of thinking to come together and talk about our investment ideas. We have people in there saying, hey, I'm looking at blah, blah, blah. I'm looking at Ford stock. What do you guys think? And people have a good, engaging conversation about it. This is all available, all in our tool, all of this for about $1 per day. Sign up now. $1 per day gets you all of this. For the price of a cup of coffee, you get all of this, $1 per day. Sign up. And the best part is, whatever you sign up for today, that's your price that's locked in, because the price goes up every single month. But you're locked in at the price you sign up for today. So $1 a day gets you all of this. No-brainer, guys.
And that is our take on AMD. Slightly overpriced at the moment, as expected. When all these come back into our wheelhouse, we will be doing a lot more videos about what you can be buying. But at the moment, let's be patiently waiting for a good buy. That's our take. Final thumbs up. See you next video.